Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC's Ross Clark comments on whether the Greek situation will boost gold prices. Sprott U.S. Holdings Chair Rick Rule believes some natural resource stocks are quietly bouncing back. And banking activist Alan Brown expresses serious concerns about the Trans-Pacific Partnership. We'll talk to Ross Clark right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Welcome to This Week in Money.
Glad to be with you, Jim.
Ross, heading into the long weekends in July for Canada and the U.S., how are the markets looking like right now?
Well, this was a rough week on the Canadian side, sort of a flat to down week on the U.S. side. And that's the norm. We had talked a week ago about how, I think it was the numbers I had, 22 out of the last 25 years, that the U.S. equity market was down in the month of June following the option expiration on what they call the triple witching. That's when you have futures options expiring on the Friday before Thursday, Friday of the month, and this will now be 23 out of 26 years that it's had a downside bias. I think down about 1% on the S&P for the week. But overall, this really tight trading range that we've been experiencing for the last number of months just continues in here. Taking a look at seasonal factors, you probably got about a 60-40 chance of the market having some upside bias next week, but ideally, you'd hope for a little deeper correction leading up to a summer rally. We'd be hoping for it to be a little deeper than what we've seen in New York at this point. Around the world, though, things are quite a bit different. The Shanghai market, which we've talked about off and on for the last month or so, which had just gone ballistic on the upside, getting up over 5,000 on the index, reversed a week and a half ago, put in a failed rally early this week, and came off again. And it's actually now starting to become pretty interesting. It's given the price action moving up to test the highs that we had back in 2000, 2007, and 8. Very similar to what we've seen this time around. This is also very similar to what we saw in the gold market as it tested its highs in 2006 when it was pushing up against the $800 level for the second time in, 30-odd years there. What we're seeing in Shanghai right now presents, I think, a different set of opportunities for people. We've corrected roughly half of the rally from the February bottom. We've now corrected just shy of 50% of the whole one-year advance from the lows that we put in spring of last year. Probably another couple hundred points in Shanghai would satisfy that. We're sitting around the 200-day moving average, and so it looks as though the worst of this hard break in Shanghai might be right behind us. And with the magnitude of the decline, the speed of it, what you have is a nice opportunity where the option premiums, those are call options and put options, the ones that give you the right to buy or sell something at a future date. Premiums on those have expanded dramatically during this turnaround in the market. And for clients, investors who are looking to earn some time value with options, there are just some great opportunities that have presented themselves now. It's one of those anomalies. You sit back and you wait a couple of times a year for things like the break we've seen in Shanghai. And if any of the listeners have an interest in participating in that type of investment, I'd be more than happy to go through an educational process with them and show them just how it can work.
What are precious metals looking like right now?
We are slowly grinding our way down. I was looking at the COT numbers, the Commitment of Traders numbers this week. You've got positions back up as far as the commercial shorts are concerned, and back down by about 25, 30,000 on the long positions of specs. So we could be ready for a little bit of a short-term rally. I'm not at this point looking for too much. We'd really need to take out that 1235 to 1250 to say that there's a breakout happening. Clearly, as the next few days unfold here, situation in Greece, which is still up in the air, will probably have some type of resolution. Either it gets maybe a final resolution, which I thoroughly doubt, or we kick the can down the road here another few weeks or months. But you're bound to see some volatility there next week. The upper numbers, I would say 1200 to that 1235, probably going to have a lot of trouble in the gold market at this point unless there's a real outside catalyst. Trouble
in Greece wouldn't boost the price of gold?
Well, it would if you're a European, I would think. You have to remember, gold, it's important based upon where you are living and what currency you're dealing with. And if anything, a Greek situation may end up providing a sell-off in the euro. Maybe it becomes a climactic low. But initially, I don't think that you would see the price of gold be able to do much in terms of U.S. dollars, because if you're going to get a flight to anywhere, you're going to probably see it into the U.S. again.
Ross, thanks a lot for chatting with us.
More than welcome, Jim.
My guest has been Ross Clark, investment advisor at CIBC Wood Gundy, Vancouver. His email, ross.clark@cibc.ca. Coming up next, Rick Rule on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Rick Rule, chairman of Sprott U.S. Holdings Incorporated. He's on the line from Carlsbad, California. Rick, welcome to This Week in Money.
Always a pleasure. Thank you for having me.
The Sprott Stansbury Vancouver Natural Resource Symposium is being held at the Fairmont Hotel, Vancouver, July 28th through the 31st. Tell us about the symposium and where people can get more information about it.
This will be our 20th year in Vancouver at the Hotel Vancouver, so it's one of the longest-running resource conferences in the hemisphere, and I humbly suggest to you it's the best. It's the best for a couple of reasons. In the first instance, it's a paid conference, and people who pay to go to a conference demand more from a conference and put more into it. But what that means is that you'll be joined by hundreds of other professional investors who care enough about their investments to pay to learn about them. Because the attendees pay, the loyalty of the conference promoter is to the attendee rather than to the exhibitors. And the current conference is really a consequence of attendee evaluation forms that we've gathered over the past 19 years. Attendees told us that they considered exhibitors to be content too. Most conferences believe that exhibitors are merely advertisers, and at most investment conferences, the qualifications to be an exhibitor are a check that cashes and a pulse, in that order. From our point of view, our attendees have considered our exhibitors to be much more than advertisers. They consider them to be content. And no company may exhibit at the Sprott Stansbury Conference that isn't either a current recommendation of Stansbury editors or is not owned by performance-based accounts managed by Sprott. Now, the fact that we own those companies or parts of those companies doesn't guarantee that they'll be investment successes, but it guarantees that we have invested the time and attention into them to differentiate them from anybody else who might apply to be an exhibitor here. And make no mistake, we've turned down dozens of potential exhibitors. The second thing that the attendees have told us that they wanted was, in addition to having the analysts and newsletter editors that speak to millions of investors, they wanted CEOs, but not any CEO. They wanted CEOs that had built and continued to run large mining companies. And they wanted those CEOs to tell us about the investing lessons that they had learned building these big mining companies and how to go about, as investors, figuring out which management companies of small teams could build them into large teams. And so we've done that this year. The teams that built you, as an example, Franco-Nevada and Silver Wheaton will be present and speaking, and other CEOs will be speaking as well. So I think that this is really truly a conference with a difference, and we invite your listeners, your readers, to come to our website at www.sprottglobal.com and click on Conference for more information. The other alternative would be to go onto the web at www.naturalresourcesymposium.com.
Rick, I think it's very fascinating that this is an exhibit that's driven by the people who use it instead of you imposing on them what you think they should know.
Well, that's exactly right. What we've learned in the Sprott business over the years is that if you want to find out how to service your customers better, ask them. Some of the ideas that you get are preposterous, and some of the ideas that you get back are geniuses. But nobody knows how to service our customer better than our customer.
Do you think too many companies decide we have the answers for everything, and although the old saying is the customer's always right, we know that isn't always correct, as you just mentioned. But on the other hand, sometimes just the simplest little suggestion can make all the difference in your business.
Well, I certainly hope that none of our competitors figure that out. We would like to have a monopoly on that source of information, although it seems highly unlikely.
Well, one suggestion that came from a person who worked there, Enterprise Rent-A-Car, where they have the slogan, "We pick you up." Now, I thought one of the hardest struggles is how the hell do, after I drop off my rental car or I get there, I'm going to have to pay $50 for a taxi to get there.
Yep. That's a very good point. Very, very, very good point.
What's one of the best suggestions you've heard?
Well, I actually think in the context of the conference that the attendees told us so loudly and clearly that to them the exhibitors were content too. And that's good for all parties, because an exhibitor that exhibits at our conference gets implicit or even explicit endorsement from the podium at the same time that the attendees get what they want. It's good for all concerned to have a conference where the exhibit hall has the good, the bad, and the ugly in all in one room, is probably inefficient for everyone. So that's certainly a good idea that we got. A more recent idea in the Sprott Global business has been the clients saying to me that they understood that the wear and tear on my carcass going around the country was extraordinary. Why didn't I do more webinars? Why didn't I do more conference calls? And I'll tell you, not too long ago, I was on a webinar where I got to speak to 12,000 people from the comfort, literally, of my living room. What a wonderful suggestion that was for a 62-year-old.
Rick, getting into the business side of this, in the past you've called for a call of a lot of the junior miners. Would you like to see more of that happen, even though people are going to lose jobs and shareholders lose their money?
Certainly would. The shareholders have already lost their money. The question is how much more they lose. John Kaiser, I think it was, pointed out that there's in excess of 600 companies on the Toronto Stock Exchange Venture Exchange with negative working capital. Now, we've done a survey, and we believe that it costs about $500,000 a year minimum to list a company on the Toronto Stock Exchange. But much more commonly, in terms of paying salaries and everything else, it's $1 million a year. So we have 600 companies at $1 million a year that are zombies, companies that are serving no useful purpose. That means that $600 million a year is being diverted from investors' pockets and from mineral exploration or mineral development for no purpose whatsoever. I've said for years that the junior mining industry's worst wounds were self-inflicted, and we should stop inflicting these wounds on ourselves. We should basically boycott the non-viable companies and concentrate our love and affection on companies that actually stand a chance. So I think it's a very, very healthy phenomenon.
Will investors be able to benefit when the bull market returns to the resource sector?
I think the benefits already started. I think it's important to note that while last year on your program we were talking about the coming bifurcation, the bifurcation is well underway now. The top 10 or 15% of the companies on the TSXV are in their own bull market. Nobody notices it looking at the index because the index is still burdened by all the zombies. But the truth is that the viable companies with reputable management teams and good properties have long since begun to get bids. And when they go out for financings, they get financed. It doesn't feel like a bull market because it's starting from such a low level that people are disgusted by the price quotes, even from the good companies. But the truth is that they're up 30, 40, 100% from the bottom, while the rank and file, if you will, the breadth of the market is still in decline. The bifurcation has begun, and the bull market for the best has begun. The same way the bull market for the best began in 2000. The rest of the market didn't follow until 2002. Past in this case is prologue, and the bull market has begun, but only for the best of the best, as it should.
Should we be taking a look at ways to increase interest in the junior market, or is that something that people have to do for themselves?
I think people should do it for themselves, but the truth is that you don't have to work real hard to do something that's going to happen anyway. It might not happen in the time that you and I would like. I could easily see it taking 18 months to 2 years, like it did last time, for the bull market to really, truly get started. But there's not a lot that you and I can do about it. What happens is, in the first instance, the very best companies are simply oversold and they rebound, and we're seeing that right now. And that very momentum begins to attract some attention. The second thing that happens, and we're beginning to see that too, is that you begin to see amalgamation and merger and acquisition activity. And that does two good things. For the company that acquires, they get a broader asset base to amortize their G&A over. For the acquired company, its shareholders, they get a premium. And that adds cash and liquidity to the market. It adds hope and cash both. Also very good things. The third thing that happens is, as a consequence of a few investors benefiting from the rebound of the best companies and M&A, you start seeing those investors become a little more aggressive in their response to news. You start seeing drill holes generate buying, and we just saw that with Sandstorm in Australia. When you begin to see momentum on news in conjunction with M&A and in conjunction with the general market rebound of the best issuers, the bull market gets underway in earnest. Now, one caveat I have with regards to that: we didn't have the capitulation sell-off that we talked about last year. So the recovery that we experienced this time could easily be a saucer-shaped recovery. Higher highs, higher lows, but a long, drawn-out recovery. It's very interesting that we are beginning to see this recovery without any recovery in commodity prices. In fact, commodities appear as though they're going to stay soft for a substantial amount of time as a consequence of really, really constrained economic activity around the world. The truth is that we're in the midst of a demand crisis, or rather a lack of demand crisis. Lack of demand for finished goods, lack of demand for intermediate goods, and of course as a consequence of that, lack of demand for basic materials. If, as some people suggest, the economy does get better, and demand and workers' incomes increases, and you begin to see demand pull inflation and commodity prices, then the junior resource bull market gets underway in earnest. But unfortunately, I see no signs of that happening in the immediate future.
Would banning of shorting help the juniors right now?
I think banning of shorting is an extremely stupid idea. I think that the shorts fulfill a very useful purpose. I happen to believe that more than half the companies on the TSXV are non-viable companies. And if the short interest had been more aggressive in the 2004 to 2011 time frame, maybe some of those zombies wouldn't have survived, and maybe some of the innocent people who lost money in those companies wouldn't have lost the money, and maybe there would have been more money to go around for viable competitors. The truth is, 20, 25 years ago, when I, in addition to being a broker, was involved in some aspects of helping people with stock promotion, there was nothing I liked better than a good, big, fat short position against my companies. It meant that there was some built-in buying. Whether that buying took place higher or lower was up to me and my adversaries in a war place called the market, and I loved it.
Do you think people forget about that? They want an easy road in?
I think, and it's understandable, I think that most people, I'm not counting you and me among most people, but most people have lives. They worry most of their waking moments about things other than the market, and they don't think through issues like shorting and how helpful, what a useful function the short interests fulfill. When people think about it, when people think about what a free market is, that means you're free to buy and free to sell, then they understand that the short interest is a useful interest.
What do you see ahead for the junior markets in 2015 and 2016?
Slow recovery, wonderful, a stock picker's market. Very, very nice time to participate in financings if you are an accredited investor and have the connections to be able to do that. A time, and it's always time, by the way, to review your own portfolio very harshly and see if you have any stocks left in your portfolio that you have there merely as a function of hope. Selling those and concentrating the remaining money on the best names.
Well, an expert told me once, hope is not a plan.
Hope is a four-letter word.
What do you see better going ahead, gold or silver?
I'm usually precious metals bull markets are kicked off by gold and then move to silver. So I would be focusing on gold. But the truth is, if you're out of the metals and into the equities, pay more attention to companies that are developing exploration projects, irrespective of commodity, that you think will generate positive answers to big unanswered questions. I'm agnostic personally in the equities between gold and silver, although in my experience, when a bull market gets going, the silver goes further but less fast than gold.
Now, you said take a look at where there's exploitation possible. What about the zinc market? All the major mines are closing down.
Yeah, zinc is in surplus right now inexplicably, which tells us two things. It tells us that demand for zinc and demand for stainless steel is softer than people thought it would be. But it tells us that there's more production in China than we have thought about or know about. But the truth is the time is on the zinc market side. At some point in time, you are going to get renewal in automobiles and in consumer durables. You're going to get renewal in demand for stainless steel. And at that point in time, the tight supplies in zinc will only be able to ration themselves through higher zinc prices. The question is, of course, when? Is it next year? Is it the year after? Is it the year after that? And at 62, I'm too old and wise to be drawn into that forecast.
What about lithium? I mean, the huge demand for electric cars expected in the very near future. Without lithium, their batteries don't run.
Lithium supply problems are non-existent. It's a wonderful thing that lithium is going to be able to do for the battery market. And it's wonderful for mankind that such an extraordinary surplus of producible lithium occurs. There is lots of undeveloped lithium in salars in Chile and Argentina, and if that begins to get tight, larger supplies still in Bolivia and Afghanistan. If that doesn't work either, one place the industry might go is to the Imperial Valley of California, where the chief fouling agent on geothermal wells is, you guessed it, lithium. And beyond that, the deep natural gas production on the U.S. Gulf Coast is produced in conjunction with saltwater brines containing lithium.
And somebody told me there wasn't enough lithium around to meet the demand. You make it sound like this stuff is almost coming out of the water tap.
I suspect that the person who told you that is either very long lithium stocks or doing due diligence on Vancouver's latest investment fad, which is, of course, marijuana.
Maybe they're going to mix the two of them together. A marijuana lithium battery, that would get people interested. And by the way, people who are getting into this marijuana grow trend or phase or fad, are they stepping into an area that the government could really crack down on tomorrow?
Well, I wouldn't put it past the government to screw anything up. It amuses me to see, particularly in Vancouver, a coming fad where unusually most of the officers and directors probably have direct experience with the product, and one where due diligence takes place nightly on most street corners. So I think it's probably a good thing. It's not something I'm particularly interested in, either as a consumer or an investor. But the whole process amuses me.
And I just saw somebody on a TV show the other night who's an expert in law, medicine, and how the things work together. They said younger people today, they're going to be the politicians of tomorrow. And he said North America wide, he could see it being made legal in the next 5 to 10 years.
I hope so, certainly. I don't see any particular point in prohibiting somebody from doing something that doesn't damage anybody else. And more in the United States, I think, than in Canada. The idea that you take a young person, particularly a young person of color, catch them doing something that does no harm, and then send them to prison, which is, of course, a finishing school for crime, and expecting to have a happy outcome is incredibly stupid.
Getting back to resource stocks, what would trigger a resource stock boom again?
I think a resource stock boom is frankly inevitable. You're old enough to remember the old Purolator oil filter commercial where the greasy mechanic comes on screen and points to a $10 oil filter and says, "You can pay me now," and then he points to a blown engine for $2,500 or $5,000 and says, "Or you can pay me later." And that's where resource markets are now. You're going to have a recovery one of two ways. You are going to have a recovery because of a demand recovery, which means you get a little increase in demand now and prices rise. Or, if it goes on longer, you're going to have supply destruction. And ironically, if you have supply destruction, which means commodity prices go lower first, then they'll go much higher over time. But the truth is, and we've talked about this before, anybody who studies commodity markets or commodities equity markets will be forced to admit by simple history and logic that bear markets are the authors of bull markets. We're 4 years into this bear market, almost 5 years into this bear market. This bear market is very long of tooth. Can it go a year or a year and a half more? Sure it can. I actually think it's over. I think we're in a stealth bull market now. But because of bifurcation, we're just seeing it in the best of the best stocks. But the truth is, it is an inescapable fact that bear markets are the authors of bull markets, and bull markets are the authors of bear markets. All one can do is buy the best of the best in any particular subject where he or she believes they have competitive knowledge, and hang on and enjoy what's to come.
And again, maybe remind people about your website.
Sure. We would love people to come to our conference, come to our website. One of the things that I always urge people is to come to www.sprottglobal.com and click on subscribe to Sprott's Thoughts. 3 times a week you'll get the best ideas from the Sprott organization, both inside and out. I absolutely guarantee you'll get your money's worth because it's absolutely free.
Rick, thanks again.
My pleasure. Thank you.
My guest has been Rick Rule, chairman of Sprott U.S. Holdings Incorporated. Coming up next, Ellen Brown on This Week in Money.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Ellen Brown, California-based author, political candidate, attorney, public speaker, alternative medicine, and financial reform advocate. Welcome to This Week in Money, Ellen. Today we want to talk about the implications of the Trans-Pacific Partnership, a proposed regional regulatory and financial and investment treaty involving 12 countries bordering on the Pacific. What I want to know is what's in it, and if we don't know what's in it, should we be concerned about it?
We should definitely be concerned. It covers 40% of the global population. And what just happened was Fast Track effectively passed. I mean, it passed the House, and the barriers passed in the Senate yesterday, so it's pretty much a shoo-in. And Fast Track means that any of these trade agreements that can come down for the next 6 years will get they'll be pushed through very quickly. So the Congress has a very short time to look at them. It's an up or down vote. They don't get to debate, argue about the details or change the details. No filibustering, etc. So these trade agreements pretty much breeze through. And the one that we just heard about, I mean, it's been around for a while, but that WikiLeaks just revealed some of what was in it, is the Trade and Services Agreement, which covers 80%, or will ultimately, or is intended to cover 80% of the American economy and 90% of the global economy if they manage to get all the trading partners that they're aiming for. So that includes things like banking, financial services, and education, and internet, all that sort of thing. So it covers virtually everything. Between these 3 agreements, there's the TTP, which is the Pacific Rim countries with us. Then there's the TTIP, which is the agreement with the European countries and the U.S. So among all those agreements, you pretty much covered global trade. But it's not all about trade. They make it look like it's about trade, but what it's really about is establishing basically what I would call outsourcing the judiciary, where you allow these a corporation that feels that it has lost profits for some reason because of something that a state has done, like any level of government might have done, like if they're trying to protect their citizens in some way or protect their environment, and so they pass laws that perhaps cut into somebody's corporate profits. They can take the state or country or whatever it is to these three. They're not even judges. They're panels of three corporate lawyers, arbitrators, who rule, and they don't have to follow any precedent. There's no appeal. I mean, it's totally what I would call a kangaroo court, and that's binding on us, on whole countries. So it's shocking that they would go along with this. You have to wonder why. I mean, are all these Congress people paid off, or do they not? Do they only read the bought and paid for media, and they don't read outside the media? Have they never heard of WikiLeaks? I don't know. But we seem to know so much more about them, about these deals, than they do.
Letting three absolute strangers to you and I decide the course of our country's history, is that not the scariest concept ever?
It's horrible. I just read an article, and I cited the Alice in Wonderland because it just seems so, it's like a nightmare, that it seems so Orwellian or so Alice in Wonderland, with the Queen of Hearts that was arbitrarily came down with judgments without any reasoning.
So much for British common law, which we have followed, at least in Western states, for the last 1,000 years?
Right. So much for Republican government, democracy, all those things. Or our Constitution. The whole idea of the Constitution is that you are governed by laws and not by people. And now you've got people that can arbitrarily, or really you're governed by corporations. So the rights of corporations have been put ahead of the rights of people. And that started, or anyway, a major factor in that was where our Supreme Court said that corporations were people. I mean, next they'll be amending the Constitution to say corporations are people and have rights that trump the rights of individuals.
And of course, this agreement would override the Canadian Charter of Rights as well, wouldn't it?
Yeah, that's it. All these countries have to harmonize their rules. We saw that when our big banks came up with this derivative scheme, but the only way they could really make it work would be if all the countries had it, because if you were in a bank that was doing risky things with your deposits, we lifted Glass-Steagall, repealed Glass-Steagall, which separated depository banking from investment banking. So the big investment, or the big, like Goldman Sachs could be, well, anyway, J.P. Morgan, which was a depository bank, then became an investment bank as well. I mean, they could use our deposits to gamble in the derivatives market, basically. So in order to get that scheme to work, as soon as you saw the risky things your bank was doing, you would pull your money out and maybe take it abroad. So they had to get all the banks to agree to accept this same scheme, which they did through a portion of the World Trade Organization agreement. So this is just an extension of that, where they will force the same rules on everybody, and the rules are basically lifting the rules. In other words, it's a race to the bottom, or a race to the most liberal, or the most lax rules. So, yeah, it's shocking and frightening.
Didn't we fight World War II to stop dictators from telling us what we can do, what we can't do, and what we should think? Is this as much of a threat as we saw in World War II?
So I think this is like World War III, but they're doing it they don't need to do it militarily anymore. They've got all the countries locked up. They own, the whole goal is to own everybody. I mean, that's basically the goal of wars anyway, is to take over territories, colonize. So now the colonization is financial, and they're winning. Unless my only hope, the light the end of the tunnel, it seems to me, is that people are already so outraged about this, and I think they'll get more outraged the more people understand what really just happened, that people will finally realize that neither of the major parties is representing us, the people, and that we need either a new party or a new movement. Of course, we have little parties, but they're just not big enough and powerful enough to stand up to those big moneyed parties. In fact, I think the way to get the money is to have publicly owned banks so that our legislators can be freed from having to cater to the whims of their big corporate banker funders.
Do we have any idea who that 3-person tribunal would be?
Well, it's like, you know, in arbitration where they just have, so they're appointed temporarily, like they appoint 3 lawyers who know the business, but they're corporate lawyers, and they'll no doubt go back to representing corporations. So it's a revolving door in a private system, which is not even subject to U.S. law or Canadian law or, you know, local law. They're independent.
In other words, if a municipality passes a law saying you can't have dogs on your property and the corporation wants a dog on the property, I'm just using this as an example, the municipality's bylaw would be overridden, wouldn't it?
Right. And there, in the new that this trade and services agreement, it's got what are called standstill and ratchet provisions, which means that once you have liberalized, once you have privatized something, you can't go back. So, of course, my particular interest is banking and getting some public banks established. So if if banking is already privatized, which of course it is, then they can say, well, you can't go to public banks now. You can't have a system of municipally owned banks because that is unfair competition against our private banks. There are many advantages to being a public bank, and that's the whole point of being a public bank. It's we, the people, who own the bank. But it does give advantages as against the private banks, and they will say that violates these free trade agreements.
What would happen if one of the 12 nations, and I assume Canada and the U.S. are among them, what would happen if they said, we're not going to sign this? Would they be frozen out of trade with the rest of the Asia group?
I don't know, because I saw that one country, which I've forgotten, it's a Latin American country, they refused to sign these. All these trade agreements have these ISDS provisions in them. It's investor-state dispute settlement mechanism. So that's the thing where you have to arbitrate these disputes, or where you can take a government to court or to this arbitration panel if they in some way impair your profits. So it was, I forget which country, refused to go along with those provisions, and they still have plenty of trade. I mean, it hasn't hurt their economy at all. And supposedly this is to help our foreign trade, but it won't. It's not about that. And the more you look into what the provisions are, the more you see that that's just a very minor part of it. And we've already got, there are hardly any tariffs left anyway. So that's normally what trade agreements are thought to be about. It should be a treaty. It is a treaty, and it should require a 2/3 vote of Congress.
Why would this agreement include education?
As a service, and it just covers every sort of service, like a trade in services. But that's a good question. How would you outsource education?
Well, I mean, they have outsourced education in the United States. They've outsourced the prison system. So, having a privately owned school, why not? I mean, most universities, I think, in the U.S. are already private institutions. Why not make all of them private?
But I mean, how would you don't actually send your school system to another country, or I'm not sure what the logic of harmonizing the regulations between school systems would be.
Yes, and I can just see, the difference in what's taught in Canadian history, U.S. history, and say Japanese history. Japanese history barely mentions the Second World War. The only question they're asked is, why did the U.S. drop atomic bombs on us? They don't mention anything about Pearl Harbor or what Japan did in China for 10 years, killing millions of people there.
Yeah, that's an alarming thought, harmonizing all our books, all our information. I mean, you see all this stuff about the Internet. The Internet is blamed for everything, like this recent Charleston shooting. So what happens when they try to harmonize what we all read? I mean, they used to harmonize what we all read, and that's how they could mobilize people to go to war, because they convinced that, well, I know somebody who fought in World War II, and I was saying, what about Hiroshima and Nagasaki? I mean, how do you justify that? And he said, well, you have to understand, these were not people to us. They told us they were slant-eyed devils. And I saw something after the war was over where they were saying that the Japanese were like children, that they weren't really inherently bad, that they were teachable, and that we should be more sympathetic to them, because they had already branded them as a certain, type of non-human in order to get people to go along with dropping bombs on them. So then they had to rebrand them as teachable, but just naive or something like that. Anyway, they couldn't get away with that today, because we can see on the internet there are internet bloggers who go around and take pictures and videos of people all around the world and interview people. So if you are alert and if you're interested in discovering what's really going on, and once you discover that your conventional media is not giving you the straight story, it becomes really interesting to find out what's really going on.
I haven't seen anything on the evening news about the Trans-Pacific Partnership at all.
Yeah, well, I think they control the news. The news is always about local shootings or it's always about violence, I think, because they want to get people afraid, very afraid, so that you will accept the military police aspect of your government. You'll accept that you need these rules in order for security. We do need government, but we need it to protect us against the big corporations, not to protect us against shooters.
So why should we even bother to have local or provincial or state or national elections if these three lawyers are going to run everything?
Yeah, exactly.
What can we do about it? Is it too late? I mean, Japan said they plan to sign it next month. Is there anything we can keep American or Canadian legislators from putting their pens to it, if we're that concerned?
Well, we're certainly, there's a growing movement to try to block the TPP from being signed. I mean, it will definitely be harder because we lost on fast track. But maybe arguably it will be the straw that wakes people up enough to actually change the fact that our government has been taken over. It's no longer our government.
Well, here in Canada, we have protests against the installation of pipelines to the Pacific coast because people are worried about the environment. This treaty would actually make them suable, wouldn't it?
Yeah, that's the trouble, that legislators will be afraid to pass any sort of legislation because they'll be thinking, well, somebody might sue us over that because we might hurt their profits in some way, which is the whole point of legislation. I mean, if somebody weren't impaired, you wouldn't have to have legislation if everybody agreed that it was a good idea. So that's what legislation's all about, is to set the rules so that you protect the majority as against the interests of some greedy minority.
I mean, really, this agreement could make it legal for them to put crystal meth into your food because you would become addicted to it. And if you tried to remove it, that would lower their profits and they could sue you for it.
I know. It's amazing what the things you can imagine that could happen, yeah.
And the thing is, people say, oh, you're exaggerated. Well, take a look at the additives that they put in our food now. Things that are used to preserve rubber or lubricate your contact lenses.
Yeah, or the fact that you're not allowed to know that food is GMO on the theory that GMO is harmless. And yet science differs on these things. So they can legislate things like science has established, for example, let's say that immunizations are not harmful and that we need to immunize everybody to protect the people that can't get shots or something like, whatever. They can come up with, this is what science says. Or they can say, science has decided that margarine is better for you than butter, so everybody must eat margarine. And when, in fact, margarine is much worse for you than butter. So who knows what's good. That's the whole point of freedom, is that you should be free to test and to, buy what you want and to know what's in what you buy or what you are buying.
Ellen, is there a website people can go to find out more about this issue concerning the Trans-Pacific Partnership?
Well, there are a number of websites. My own website is ellenbrown.com, where I have several articles on it. and publicbankinginstitute.org is our public banking website. But then there's Flush the TPP and just a number of sites on the TPP. It's pretty, if you Google it, I'm sure they're findable, or I have in my latest article.
Ellen, thank you very much for chatting with us.
Thank you for your interest in this issue all the way over there in Canada, but I do think it affects us all.
My guest has been Ellen Brown, author, political candidate, attorney, public speaker, alternative medicine, and financial reform advocate. She lives in California. That wraps up our show for this week. Thanks to our guests, Ross Clark, Rick Rule, and Ellen Brown. And thank you for listening. Comments or questions for This Week in Money can be emailed to info@howstreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
This Week in Money is a production of How Street Media Incorporated.